All right, folks, welcome back. This is our weekend commentary for the ICT Mentorship. All right, so we're looking at the dollar index. It's our daily chart. And I just discovered there's a little box up here. And that is driving me nuts. I have no idea what that is, but it's going to get on there. So we'll have to make do with it because I'm pressed for time. So we've obviously seen a continuation since Wednesday's midweek review. I was expecting higher prices, but I said I was taking my hands off. I'm not trying to forecast anything beyond. We fell just short of 104 big figure. I have here the high on Thursday, and then Friday we traded back down into the 103 big figure. Also trades inside of the buy side imbalance, sell side inefficiency. This is essentially institutional order flow entry drill. So we might get some continuation on the upside going into next week. And I'll talk a little bit about that when we get into euro and cable. All right, hourly chart. And you can see we had a nice little displacement here. Swing low, taken, runs up into SIBI or fair value gap. Breaks down, attacks the 103 level, and runs back up into a imbalance there, and then once again hits the 103 level. Let's use this logic here and frame out a scenario on the 15-minute time frame. All right, so here's the 15-minute time frame on dollar index. You can see that fair value gap we traded up into from the hourly. Let me go back up and show you. Here. That's what these lines are. And on the 15-minute time frame, you can see the trade rate up into, bumping the short-term high here, working inside this imbalance a little bit again. And then we break below, breaker, trades back down below the 103 level. Now let's go back to the beginning of the move. Displacement. You can use this entry, stop is here, or entry here, stop is here. Okay, so the stop has to be above the imbalance, and it begins on this candle here, and just for good measure, the swing high is perfect. Now, if you look at what's below us, once it hits these levels in here at the premium level, remember it's Friday. TGIF scenario, pulling back into the weekly range, 20-30% of the weekly range. We have a big figure below us, and we have a somewhat of a short-term shift in market structure as indicated here. So if we're looking for bearish dollar, where could it reach for? Obviously the 103 level. We have relative equal lows here, and then right below here. See that? And that's where she goes. So we break down, hit that liquidity there, retrace back up into a bearish breaker. How's this a bearish breaker? High, low, down close candle, higher high than this one. So that's a bearish breaker with a SIBI. Hits it, consolidates, trades lower, and attacks the sell side liquidity resting right in here. That would obviously set up scenarios that would be bullish for euro and cable. All right, speaking of which, euro dollar daily chart, and we had a nice run below our objective, 1.06363. That was our objective, reaching into that on Monday's analysis. So we have Friday, Thursday, Wednesday, Tuesday, Monday. And it hit it right there, shallowly, but then had continuation, obviously, as we were expecting. Hourly chart on euro. Okay, on Monday, we had our buy side liquidity in here. Go back and watch the Monday teaching, when I was teaching the entry technique. I was explaining narrative. And I think you can pick it up around the 6-minute mark or just a little bit before the 6-minute mark on Monday's video. That would be April 25th, 2022 video. Okay, I'm talking about Euro. And I'm framing out, I want to see it run above the buy side first, and then make a run into our objective here, 1.06363, which it hits beautifully in the same day, on Tuesday. Okay, we'll talk a little bit about that when we get on the 15-minute time frame. But it breaks lower after consolidation. Another lower consolidation here. Heaviness reaches up into a SIBI, rolls through, attacks the sell side, gets a little muddy in here. And that's all during the time when the dollar's topping out near term. Now, I'm not calling it top in the dollar, but for the week it is. The weekly range, it's topped out in this area here during this time. And then we trade back up into a SIBI here in the form of this fair value gap. So as a draw on liquidity, and it comes right back down in and allows a buy side and balance, sell side efficiency to act as a discount array. So there's a little scalp in here that would set up just a little bread and butter setup. All right, in the 15-minute time frame, you can see we got a little muddy going into Thursday and Friday. But we had a nice little run here, reaching up into that imbalance in London. We break lower, imbalance here, and it just overshoots a little bit. So you can see it's a little too messy for me. And I have two people that are emailing me, pressing very hard about finding setups right now. And I mentioned, obviously, in the midweek review that you want to kind of like be careful and take your hands off, because we've already moved and hit all of our objectives and our targets, and it was late in the week. So you have to be mindful of that and be careful. And you can see it's a little muddy. It's not as clean for the setups that we would like to look for. They're there, but I wouldn't expect you to be able to see them because you don't have the experience yet. And that does sound a little bit, arrogant, like I'm trying to talk down to you. I'm not. I'm trying to stay on the side of being very cautious for you. And as a mentor, my first job is to protect you. And this is what I mean. When we talked on Wednesday night, here's Thursday and Friday's price action. It's a little jagged. All right, so let's go back into the discussion I gave on the 6-minute mark on Monday's video. I outlined how there was buy side liquidity here, and it's going to be more meaningful if you stop the video here, go back and watch Monday's video around the 6-minute mark, and then once you watch that, come back to this one, okay? All right, I know some of you didn't do that. Buy side is here, and I mentioned how I want to see it go up and rally overnight into London, taking the buy side out, and then attack the sell side here and work towards what level did I say in that video? That level right there. And it hits it. Boom. Hammers it. Rotates all around on it as support. Rallies once more. And then gives up the ghost and goes lower. In this area here, this is London kill zone. New York kill zone. In this area here, from here to here, I said I would look for a bearish breaker, a premium fair value gap, something to get short on, and let's go into a lower time frame chart and look at that. So here's a 1-minute chart, beginning of the 2 o'clock hour New York time, ran relative equal highs also, ran it, broke lower. This one in here is institutional order flow entry drill. That to me is the most, except for obviously shorting here, this is the highest degree entry. So for skill, it's this one, then the second one would be here. This one is the most obvious, okay, because you're going to be looking at this swing low. It rallies up, creates the high in the London session, go down to here. Do we break that low? Yes. Is there displacement? Yes, right here. Then we have what? Fair value gap. Trade up into it. There's your short for London. Where's your stop going to be? Here, for conservative, aggressive, right above the high of this candle, which sets the stage for the fair value gap. So there's 1, 2, 3 fair value gap institutional order flow entry drill, 4 entries, SIBI, 5 entries, 6 in this fair value gap here. Stop would be here. You see where I'm going with this? There's lots of setups, and here's another one here. Fair value gap. Now this is a little squirrely. You might have gotten spooked out here because stop would have to be above here. But even if you did get stopped out and it breaks down, you have displacement below short-term low here. Fair value gap there, get short there, and let it rip. And then obviously it went down to that 1.0636 something or other level on that same day on the 26th of April. So that's how we would use that. I'm showing you that because I got emails from a 2016 member saying, what do I do with the commentaries and how do I find the setups? I understand the models, I understand the core content, I understand what you're saying, but how do I go in and look for my own setups using that stuff? Just like this, okay? It's just like this. Don't try to think about it more than what I'm showing. It's not going to be hard for you if you strip it down to something as simple as what I'm showing you here. Was it hard for me to do this? No, it's not hard for you either. But you have to do this with back testing, okay? You have to do this with your back testing, annotate where each one of these setups are, and refer to them. Keep going over them on the weekend. When the charts are stagnant and they're not moving and it's still, that's when your back testing and your greatest learning is going to happen, because you're going to be able to look for patterns that will resonate with you. And if you do this, it will start to build a familiarity with these things that we're looking for during specific times of the day. London Open. Okay. All right, British pound versus US dollar, daily chart. I gave you 2 levels down here, the 1.24802 level, and I gave you the other little imbalance that's shaded with the rectangle. Go back and look at the previous commentaries. I'm not going to show you over here where it was. It was shown to you in detail so that we can see it. Beautiful. Look at the respect of the bodies on the candles on that. Okay. We trade below the old low, and then we get into that imbalance, but the bodies, look where they're stopping. It's completely random. All right. And you can see how we dug into that on Thursday and tore off into relative equal highs in here and a short-term high there. Now, should we get a continuation on the upside on dollar? This pair, I would look for it just to revisit back down into the top end of here. That's kind of like what I'm expecting. I think it's pretty much done what it needs to do for the near term on pound. I have a sneaky suspicion that they're going to keep this range bound for a little bit. And then euro could see a little bit more downside. That's how I'm interpreting what I'm seeing here. Now, obviously, things can happen over the weekend, how we open on Sunday and how we trade on Sunday and the Monday. That altogether may change everything that I'm saying here. But, off the cuff, what am I thinking, what I'm expecting going into next week, that's kind of like the stage I'm looking for. If we do rally a little bit more, watch this imbalance here. That might offer a little bit of resistance. Yes, that little square up here is driving me crazy. I have no idea what that is. I don't know what it is, but it's probably not a big deal to you, but it's driving me nuts. All right, so relative equal highs, 15-minute time frame. After coming into this imbalance here, we rally up, sweep them, dip back down into an order block, rally, short-term market structure here, order block, and one more run above to take out the short-term high here. Thursday and Friday's price action a little too muddy, and again, it's just kind of like what I was hinting at on Wednesday's midweek commentary. All right, finally we take ourselves into the evening S&P 500 June delivery contract for 2022. And here's the daily chart. And at the time of this screen capture, I was watching this low and I was watching these lows down here. Okay, I felt that we were going to obviously run these, but I was watching to see if it was going to go into some serious capitulation and just run right on through, which would have been amazing. Like, it would have been amazing to see that run right there. But we were aiming for these initially, so that's the objective intraday. So watch how that 4129.5 levels worked with. And here it is down here. In the hourly chart, you can see how created a little bit of a Judas swing here. Dropped down, retraced in, left this small little gap here. That's a breakaway gap. We break down, immediate rebalance. So this candle's low. We open, trade down. Next candle open, rebalance immediately. It's doing that so that way it can take off quickly. Okay? Immediate rebalance. For your notes, put your potato chips down. The idea of seeing a market immediately rebalance while still objectives not being seen yet, in other words, it hasn't got to our target yet. If we see an immediate rebalance, during the time it's forming, retail or less seasoned analysts or students of price action will feel that it's making a reversal. I don't want you thinking that. Okay, I want you to think about how it does this. Immediate rebalance back to that candle's low. So all of this imbalance is completely rebalanced. So that way it doesn't need to come back up here for a while, because it is allowing traders that are looking for this opportunity to get short, they're going to short in that. And then aggressively runs lower. Watch the 4129.5 level now. 15-minute time frame. Boom. Okay, so here's that immediate rebalance right there. Let me go back up to the hourly. This right here. See how it's going to essentially 42.05 here? Watch. 42.05 right there. Also inside of what? Fair value gap. Institutional order flow entry drill. Bang. So there's several things here happening. And then all of a sudden, you start seeing this cascading price action aggressive. What's it running for? Well, number one, it's short on time. It's got to get down here for the end of the week trading. The liquidity's down here below that, 41.29.5. And does it spend a lot of time getting down there? No. You have one more little opportunity here. Fair value gap, trades up into it. After this one, forget about it. It's just off to the races. Same thing here. Nice down close candle. From this low, the next candle we open, immediate rebalance. Next one here, opens, one more time up into it. Why is it doing that? It's setting the stage for a nice plunge, a nesty plunge, okay? A la 1996. ICT's S&P 500 chat room. You're probably saying, what are you talking about? Believe me, I've mentioned it in commentaries before. Nesty, take the plunge. And that's, you'll hear me probably refer to that when we're doing live streams. But this here is just a really nice run into that level that we were looking for. And the signatures here, which is absolutely beautiful. So I think that's going to be it. We're looking for, obviously, continuation on the downside. Let me go back up to the daily chart. One more. We're looking for this low to be taken out. And again, as I mentioned on Wednesday, I think I said it on Wednesday, but if I didn't, I'm saying it again now because I meant to say it. And if I didn't say it in the video, shame on me. But I'm almost certain I said it. But I don't know if we get below this low, if it's going to be a sharp acceleration to the downside, like a major crash scenario, or do we dip down and come back up in for a retracement? I don't know. Like, I don't know that. And it's not important, really. So I'm going to be looking for 40.94 to be traded to. That's my first thoughts going into next week and how we trade there, if at all. But I think we'll get there. That's where I'm focusing my attention on. So if you're going to be practicing your price action drills and tape reading, have that 4094 and a quarter level on your chart, watching the E-mini S&P June contract, and we'll see what we see. So that's going to be it for this one. I have a video I'll be posting on YouTube Saturday night. It really is not something that you're going to be, you're probably not going to learn anything from it. Okay, it's so basic of what you are exposed to here, but there's a lot of comments that the newbies over there on YouTube are asking about, and I'm going to try to do my best to try to kind of like answer that because they keep asking the same things in the comment section. So that's going to be it, and I will touch base with you, obviously, Lord willing, on Monday. And until then, enjoy your weekend and be safe.